So you just have to keep going on cruises across the Med and keep booking your holidays, and that's the crack. Ignore that flock of black swans in the sky and just get out and spend. It's Monday, the 24th of April. It is 28 degrees and sunny in Dubai, and we're loving our cooler weather these days. But oil prices are opening today in Asia, weaker, continuing a downward trend that we saw last week. We asked the market last week, last week on this podcast, what would we hit first, $90 oil or $80 oil? And the interesting thing was that the bulls on this podcast all said 90. I think there was sort of an 8 to 2, and we went to the wider market and we came back with a much more bearish outlook. It looks like the bears are winning at the moment as we opened this morning down over 1%. Peter McGuire, CEO of XM Australia, not in Australia this morning, Peter, but nonetheless, you're out and about. Your thoughts on the direction of travel? It does seem that we are very firmly in this certainly nearly evenly balanced fight between the bears and the bulls at the moment. There's as many reasons to see glass half full as glass half empty. What are you seeing?
Well, exactly, Sean. Good morning from Dubai. That US dollar index, if we start with that, it's been fairly range bound. I know we've got a big week of data coming out this week, and I'm looking forward to seeing how the numbers present from certainly Eurozone, Germany, and the US. So it's range bound. There's been no big push from equities really over the last couple of weeks. It's been, just that choppy sort of trade. Oil's given back those strong gains, as Omar mentioned. And where we sit from here, I'm just, I think we just got to see how the numbers drop and then how we move forward into May and June. But I don't think it's going to disappoint. That US dollar index sitting under 101.80. So it's had a bit of a pullback, and there may be further softness there, Sean, over the next matter of, well, depending upon that data drop, whether we're going to see up sub 100. Gold's given up the gains also, sitting at 1990, but still holding strong. And there's still plenty of excitement in the markets.
Peter, just to pick up on that currency outlook, and I know you track currency pairs very closely, as does XM. This sort of narrative of the de-dollarization, ultimately everything is a two-sided trade. If we argue, or there is an argument for the sort of the end of the dollar preeminence global economy, then that means money has to go somewhere else. So what are you putting your life savings in yuan, in the ruble? Are central banks in Europe going to start holding the yuan and where is this bulk of money going to go if indeed one takes on that narrative of de-dollarization?
Well, Sean, it's a fantastic question. And more importantly, what we've seen in the last 8 months, building on what Omar said, and this will lead into that story, we had a low, and we've got to be conscious of that, of 103 for that US dollar index in June. It hit 114.50 in September. So that massive move to the upside, strengthening. Then it capitulated back to 103 in February, and now we're sitting under 102. So you get your mind around the massive, the volatility across that complex. So this is what I think energy traders, and certainly countries and the likes of MBS just over the border here, and what's happening as far as Mr. Putin and Modi and Z, they're talking about the end of the petrodollar. Where is it going to run? Is it going to be payment in gold? Are you looking at Bitcoin? The cryptocurrencies come to play? Is there another alternative currency? It's difficult to really forecast, Sean, but we know one thing. It's extremely sensitive. And I think any bad news stories are going to really impact the value of the dollar or significantly change people's views. And that could be as early as the debt ceiling and as little as 6 weeks away. So we've got to see how Mr. Biden plays and how all of that with Kevin McCarthy rolls.
Well, just to pick up on that, we are on the doorstep of the next rate hike. Does the
Yeah,
oil market still care about rate hikes? It seems that
yes,
it's an indicator of other things.
absolutely. Because if it's worse than what we expect, then and that lockdown next second and third, so it's Tuesday, Wednesday, there'll be a blackout. If it's worse than expected this week, then that leaves Jay Powell to say, do we look at 50 basis points or do we look at 25 in May and then another run over the summer period? So we're all dependent upon where those CPI numbers lead from Germany. You're looking at what happens as far as ECB and, of course, with the US. So, yeah, that inflation story is not over yet, Sean, and higher rates and the impact that is as far as, return on investment, they're all factors that need to be very much considered from retail trading all the way through to central banks.
Well, we certainly looking at that. I mean, Saudi Arabia, as we know, the sort of kingpin here has major obligations within the kingdom's economic development program, and they do need $80 on Brent. Let's go to the survey question this morning, and it takes a little bit of thought as to where this, where you would put your tick in the box here, but. Which will win the battle to influence direction of oil prices over the month ahead? All of these four narratives you hear in the sort of ether as to which is the most impactful. The G7 GDP weakness, we heard all about that last week when we had the World Bank and IMF meetings in Washington. The economic outlook, even the 4.5% in China in the first quarter. Didn't get much of a celebration, and when you consider that in 4.5% of the China economic growth was only an increase from, because in the fourth quarter when the Chinese economy was totally locked down, well, not totally, but ultimately closed, it was still at a 2.6% growth in the fourth quarter. So the difference between the open China economy and the closed one was only about 1.67% of GDP growth. So not a great spike from there. So where are you putting your tick in the box? This is the question. What will win the battle to influence the direction of oil prices in the fourth quarter? Well, let's stick to Sudan. I mean, ultimately, Sudan, as a very large country in the northeast of Africa, with the Nile running through it and multiple countries around it, and multiple proxy countries also having an influence well beyond the one you mentioned, is one to keep an eye on. Peter, your thoughts? The Chinese, of course, are in Djibouti as well as all the other actors. Ethiopia has been in a big civil war for quite some time. It seems to be slightly eased off now, but it is the Horn of Africa has been a very volatile place. That is the Suez Canal not far away. Your thoughts on if this is a major event? Is this emerging as yet another potential black swan?
Well, of course it is, Sean. I think from, geopolitical sensitivity, if it impacts freighters, if it impacts from a war perspective, then it's certainly going to have, I think, some sort of impact as far as price to energy. And we've just got to work through that. And I've been around long enough to take on board different political hotspots or geopolitical hotspots and how they impact markets. And this one could be the start of, we've just got to see how it unravels and where that takes price. But yeah, I think it's certainly got an impact towards it.
Peter, last word for you today. Let's get the survey result. I wanted to get your thoughts just quickly on the news breaking out of Australia this morning with the major military review was commissioned a year ago for Australia. It is, the report was published this morning saying that the Australia's military is not fit for purpose as it currently stands, and it requires a major reform because of the rapidly changing strategic environment in the Indo-Pacific region. Militarization is the biggest story in essence in Asia at the moment. Everybody's spending loads on militarization, including the Japanese.
Absolutely, Sean, and military hardware. And Australia is such a large nation. It's been, 26 million people there, and the sheer geography of the nation makes it very, very difficult, I would think, to contain or to protect one's borders. So yes, we've got to spend significant moving forward, and that's just the cost, I think, of protecting your nation, your people, and your security. And we've got literally billions of people north of us, no one south, but certainly north of us. And that's the mantra of the government. And how we move with that is just going to be, I think, take on more debt and, buy more weapons.
Well, it seems you will be, you'll be the last one to the party there, because the Japanese are at it big time.
Yep.
The Philippines now, the US base is going in there. Of course, the Chinese are spending records, et cetera, et cetera. It doesn't bode well when everybody spends such big amounts of money on military hardware. Usually that hardware ends up being used in order to empty the warehouses for the next bunch of stuff, but
Yes.
we'll have to see. Obviously, watch that space. But the militarization of Asia is a story that is a little bit under the radar, no pun intended, but one definitely to keep an eye on, because it does have very serious geopolitical consequences and market relevance everywhere. So we'll wrap it up there, though. Oil trading this morning in Asia down over nearly 1.5%. Will Brent break through 80? It's looking certainly close. Intraday, you'd expect it could dip, but will it close below? We'll have to see when the European markets open. But thank you so much. Great to have everybody. Omar Najia, Peter McGuire, and Vandana Hari. Thank you really for your thoughts and insights this Monday morning. We look forward to catching up with everybody 10:30 UAE time. All the best.
Thank you, Sean. Cheers, Omar.
Cheers, guys.